Recording. Good evening, ladies and gentlemen. This is Clueless 8 Trading Frank. Rainy evening out here in the New York, New Jersey waterfront. 7:18 p.m. December 5th. We just have 20 calendar days, not trading days, but 20 calendar days to Christmas. And God bless you all. Tonight's session will be uploaded and to the Clueless 8 Trading YouTube channel. Like I've always said, please recommend for people who want to know a little bit about the thinking and the methodology that goes in behind Clueless 8 Trading. Feel free to mention the Clueless 8 Trading channel to them so they can listen to some of these crazy video casts that I put out there. And hopefully they'll be crazy enough to join us. We always need new members, and we always like to grow. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let us begin. Let me take a quick roll call. We have Exida. Yes?
Yes.
Thank you. You sound great, by the way. Okay. We have Brian. Brian? Okay. We have a couple of Brians in the group, so hopefully this is, one of the Brians. We have Mike. Mike, are you connected? Audio, visual, everything? Okay. We have Shawnee.
Yes.
We have my alter ego swimming the market. Yes,
I'm
Tom?
here.
Man, it's so good to hear your
Yep.
voice. I'm not going to have a bromance right now, but Tom, thanks for joining. We have Mr. Tough Guy. We have Trent.
Yes, sir.
Okay, and we and we have Dano, who just joined, right, Dano?
I am here.
Dano's out there wheeling and dealing out there, in a place where sin doesn't count, right? So figure out where he is. All right, Dano, let's kick off. All right. So tonight, what I'm going to do is we're going to scroll through a whole bunch of different market charts. We're going to look at a bunch of stocks, and I'm going to leave a section of the next 60 minutes to answering questions, whatever I can answer. Don't forget, you're with Clueless 8 Trading, so my answers will be clueless. All right, but at least I think they're going to make some sense because the market is frigging clueless, right? So it's going to make some sense. I'm going to mention a couple of trading logistics, as in trade positioning and basically what you need to do on these type of markets. Because the reality is, what we're doing in these extremely volatile markets, aside from the swing trades and stuff, which have overall worked out very well, on the names that you guys might be aware of, like AutoZone, like Chipotle, like Ulta, off the crash, and before that, and a whole bunch of other stocks, which from a swing trades basis, even the Russell 2000, S&P 500. But the reality is that if you're looking at short-term trading, which can span a couple of hours or maybe a day or two, well, what we're doing is we're fighting against the machine. You know that old song, like Rage Against the Machines, right? So what you're doing is you're trading against hedge funds who are day trading. That's why when I'm recommending something like NVIDIA right off the bat, or Amazon, or Priceline, or Google, the big type of movers, within a matter of maybe 15, 20, 25 minutes, maybe half an hour, they're up big. The cheap options, whether they be the weekly ones or even the December 15th ones going into the middle of the month, which reminds me, yes, December 15th is monthly options expiration. Okay, that makes my life easier. So the bottom line is that they move fast. They move fast. Whether you buy them at 50 cents, whether you buy them at $4, whether you buy them at $6, they're moving up 60, 70, 80, 100, 120%, because that's how those machines work. Now, this is something that I've always, tried to explain to people. And if you're going to trade those type of stocks, then you better do two things. If you can't be in front of the screens, okay? If you can't be in front of the screens, this is what happened today. Today was 1 second. Today was the 5th, right? So there's your 5th, and that's not even the picture of the Nasdaq. Let me see the picture of the Nasdaq. There's your picture of the Nasdaq. Okay, so here's the 5th, right there, right there. So the day started here, and the morning started here, but the trading day started here, right at around this 9 o'clock level. So here you get this big surge. I'm pushing out trades, alerts, right at these levels, and and the reversals right at these levels. They're just going berserk. Everyone gets excited, like, wow, this is it. This is the beginning of that big tech revival. Tech never died, guys. Okay, so there's no revival. It's just the way things are. Just because they fell apart here and then rose here really fast, and we made some decent money off that, crashed, came down. This is after hours, obviously. It's 6 a.m. in the morning, and then the market opens, and bang, it goes up, and then you get this reversal candle. So let me cover two things here. When you're trading against these machines, my charts are your only survival. They're your only savior, because the charts are put out there not just as excuse my French, naked charts with no clothes on. They have lines, they have levels, they have downtrend lines, they have upper ranges. For example, today this was upper range. They have the lower range where if things break apart, this is where it's going to be like, Armageddon, because they're going to fall apart. You have the internals, which are the basic stochastics. And I keep repeating, I look at a lot of different indicators, but I purposely don't put all of those out, because if somebody can't read these basic charts and this basic internal, remember what an internal is. It's like going to a doctor. The doctor, you're sick. That's why you went to the doctor. Hopefully you don't go to the doctor for any other reason. So the bottom line is, and the doctor says, hey, your eyes look watery, you're sniffling, whatever the case may be. That's the external. Okay? But he doesn't know what's really wrong with you, and hopefully nothing's really wrong with you, unless he does the blood tests. The blood tests are the internals. So if the internals are completely falling apart, and these type of resets, what I call, okay, the resets of oversold conditions, then he doesn't know really what's going on with you. So just by trading the externals, you will not survive this market. Yes, you can trade the candles. The candles are easy to trade. And remember, you got to use a platform that is friendly with you. If you use a platform that you're too difficult to read, then you don't know what the heck's going on. Look, trading is not easy, but it's not rocket science. And because of the speed and the velocity of how fast the machines move, it becomes difficult. Then I'll tell you how you could manage some of those trades, those fast trades that you do, okay, on some of this high beta momentum, which simply means very fast moving stocks, whether they be biotechs or whether it be techs. Generally, the techs are more liquid. The options can be bought and sold at a reasonable price, and the biotechs generally are swings, where the options generally have a wide spread, and you have a difficult time navigating in between, unless they're up like $17 in the biotech whole sector is a thing. So you can buy a Regeneron at 3 and sell it at 9. And many of you here have taken S&P trades or RUT trades during the day where you bought them at like $1, $2, $3, and they're double and stuff. But those are on certain days when the market's really on fire. The markets have been fire a lot. So anyway, let me stick to this here. So the point is that you have to watch the internals. It's not that hard. When they're crossing over, that means they're going higher. There was a small doji here. It was the first profit-taking program that came in. And remember, I try to keep as real time as possible. But I can't be posting every 3 minutes. It's just not humanly possible. Because by the time my post goes out or my tweet goes out, things have changed. That's the dynamics of the market. That's a reality. You know? It's like having a backseat driver. It's like my wife says, all the time, like, hey, don't take this turn, take that turn. I mean, honey, let me just drive. Okay? It's okay. I have a clean driving record. So you can't be always waiting around for the tweet. You got to look at your own screens. And if you're trading without screens, well, good. In that case, just sit on it. Don't worry about the volatility that happens during the day. Just stick with the swing trades because there's a good chance it's going to get there. But in between, don't look at your P&L either because it's going to look really bad. Do you know what I'm saying? So, point is that here was a doji. That doji was right here. You see that line? See the crosshair? Okay. So there was the doji, and the doji simply means indecision, like a little middle cross type of thing. And the doji was like, was right here. It didn't matter. The lines were still crossing higher. And then this happened. This is what the machines do. Look, hedge funds they use 7 to 10+% leverage. Does anyone know what that means? Quick question. So just, feel free to answer. Hedge funds, which are trading these machines, these algos, they're not trading with pure cash. They're trading with 7 to 10 plus leverage. What does that mean? Somebody step up and answer me, please. Come on, guys.
Margin?
Yes. So what does that mean in simple English? If you did explain to your wife or grandma, okay, what leverage means, or margin, what does that mean? For every dollar they're trading with, I've already answered the first part of the question. What are they doing?
For every dollar, they're trading with $10.
That's right.
Basically, right?
Yeah, exactly. All right. So everyone understands that part. So basically, for every $100 that they are trading with, that they're putting down as a down payment or cash. Okay. They are basically borrowing. They're basically borrowing another 600. Remember, 100 plus 6 is 600 to $1,000. So imagine that amplified in millions of dollars. So if they're trading with 1 million, they have the leverage to trade with $7 million. Okay, or $10 million on that instant. What is the downside of that? And this is really important because this is what we fight every day. This is the reason for volatility. And I want everyone to leave this free webinar session tonight understanding this 100%. And I can assure you, I can guarantee you only that part, that you will be far more knowledgeable about why volatility happens, aside from news and all that stuff. So somebody explain to me, if you put down $100 and you have access to $700, let's put 1,000. If you put down $1,000 and you have access to $7,000 and you're trading with that $7,000, okay, you are flying high on these type of moves, option trades, like bang, you know. What happens when the other sell programs come in? You have an inverted hammer and this happens. I want somebody to step up and just, you know, give me an idea. I want to understand. I really want to understand what you guys understand. Because I'm not some sort of genius, okay? But I understand this stuff. That's the reason why I don't get scared. Well, I don't pretty much get scared about too many things because I'm pretty much clueless. All right? But somebody step up and explain
Profit
to me.
taking?
Huh?
Profit taking?
Yeah, of course it's profit taking, but how do you get hurt when you put down? Okay, let me put this in a way that you.
Margin calls?
Yeah, but let me put the. You're answering all the right thing, but you're not like if I was grandma, I don't understand what the heck you're saying. Okay, so you got to make it real simple, and I'll do it. So point is, let's put it as a house thing. Let's say you put down $10,000 as a down payment, right? $10,000 as a down payment on your house, on your mortgage, and you got a mortgage for 100,000, right? The house price goes up to 150,000 over the next year. 150,000, right? Now remember, you put $1,000 down. How much did you make on this? How much did you make? Your house was $100,000, and you basically, the house went up to 150,000. So what is your net profits on the house?
49,000.
That's correct.
40,000.
No, whoever said 49,000 is dead correct. The actual net price of the house 49,000. You put 50,000. You made 50,000 bucks, but you had put $1,000 down, right? So you just made a killing. That's what house flippers do, right? They put very little down, and then they try to roll the house. Now, you put $10,000 down. I'm going to make it simple. 10K. You bought a house for 100,000. Please focus. Did I do the right thing? Yeah, 100,000. The house now goes down to 50,000. This is what happens in the market every day, guys. Now the house is down to 50,000. What is your loss? What is your loss?
40,000.
Uh, or your
I'm
loss
still
is
stuck
what?
on 40,000. I'm
Okay,
sorry.
okay. The house now. The house is now down 50. The house is now down $50,000, right?
Correct.
You put down how much?
10,000.
Correct. What is your loss?
60,000.
Thank you very much.
Oh,
Everyone should understand that, because this is the way the crap works. Okay, so 60,000 bucks, and now you got to come up with $60,000 to repay back that 10 times leverage. That's what hedge funds do. Okay, 10 times leverage. You can consider this as factor 1 times 10. So you basically borrowed $9,000, right? I mean, you borrowed $90,000, whatever the case may be. So when you go upside down, all of a sudden, you don't owe them 10 grand. You don't owe the bank 10 grand or your mortgage originator. You owe them $60,000. Correct?
correct.
What is that called in the stock market business?
Margin call.
Thank you. Now you know volatility. Now you know volatility. Because now I would say a good 70% of the time it has nothing to do with the news. It has to do with the biggest machine robotic gamblers in the world, which ain't going to change. It's a free market economy. All right? All of a sudden, they are in hock for 60,000 bucks. So when a stock that's, look at this for a second, made some big money, they're on margin. Remember, the market was here just a day before. You had a flash crash. This is the NASDAQ. You're talking about techs. You had a flash crash. It rose up a little bit. Now this $60,000 has to be paid to the mortgage bank. And in the case of the stock market, who does it have to be paid back to? And like you said, it's a margin sellout. It has to be paid back to the margin desk. An institutional margin desk. Okay? And the institutional margin desk is not in the business of following clueless trading charts. They're in the business of recovering their money. So if you don't come up with 60,000 bucks within a matter of 3 to 5 days, and in some cases 48 hours, what will they do?
Liquidate.
Liquidate what?
Your positions, your stocks.
Thank you. Whose voice was that?
That was me, Akita.
Exita?
Yes.
Wow, the voice isn't different. So you owe the margin clerk, I'm going to put MC, Master of Ceremony. These guys are the big honchos. You owe the margin clerk 60,000 bucks, and they will basically take the rest of your stuff and they're going to basically sell it. That's why inverted hammers happen in normal trading days. Now, was there something really bad that happened today? No. We know the clowns on Washington, D.C. trying to figure out the tax stuff and all that. There was nothing really negative. Yes, they're trying to take the alternative minimum tax away. That's going to hurt tech firms. But there was really nothing really that negative. And if it was that negative, why the heck did the market rally in the first place? Think. Once you change your thinking and once you understand the background that happens, as I'm explaining to you, okay? Because I worked there for many, many years on the Wall Street side. Okay? Then it doesn't come as a shock to you. Then it's like, whoa, there's a news coming out and it's got nothing to do with the news. Because if the news was coming out, why did Amazon go up $29 or $26 in a matter of 1 hour? And why did the whole sector lift? It lifted, the funds came in, the inverted hammer came. Why? Please, somebody answer me, because you guys already answered, have all the right questions. Why did this come, the inverted hammer? What was this?
Forced selling.
Because of?
Margin.
Yeah, margin sellouts. That's it. I'm going to call it MS. Because it's tough to write with a big Logitech mouse. Yeah. And why did the margin sellout come? And that's why these levels are drawn. These levels are not drawn after the fact. They're drawn before the fact. Remember, it's called supply and demand. Sell zones where the market sells off are supply zones. Means there's stock to sell. Correct? And the simple way of looking at it is the bounce that happened, people got caught in it. So they probably bought this right here. Now that they got even, they're like, whoop, I'm out, I'm even. Let me conserve my money. Many cases, there's a real breakout and the market goes to the next level, which was the next big sellout point. Not that hard, guys. Just think common sense. Common sense will help you a lot with trading. Now, common sense mixed in with clueless day trading charts will really help you with trading. Doesn't mean you're going to be happy every day, but overall, you're going to be happy. That's called tactical trading. So if this hadn't had a inverted hammer spinning top, that's what it's called, naked bar, whatever you call it. Once you start seeing that, and this is the NASDAQ, mind you, this is the NASDAQ 100 future, then you automatically, and I kept on showing this all day, you automatically have to take some profits off the table or sell the whole goddamn lot. Listen, there's an old saying in the world of trading: you eat what you kill. I guess it comes from our, caveman ancestors, right? You eat what you kill. So if you're trading something really fast, you better take it off the table really fast too. Leave a little crumbs in there. I don't care if it's 1 or 2 contracts. If you doubled it, which I alerted, all those things, and they literally went 60, 70, 80, 90, 120, 150%. In the case of NVIDIA, they went up 260%. Take it. Don't sit there. You want to look at swing trades? Great. I have a great bunch of great swing trades that have been posted out there. On those ones, and we're going to look at some of them too, like Alta and stuff. Don't bother. Don't look at your P&L then. Then just wait for those little pullbacks during the day to add, as long as the swing tactical direction is in the right direction. I don't just highlight AutoZone because, I know I called it right. But that's a classic example of a disciplined swing trade where we had many days, as you know, where the stock was down $6, $7, $8, $9. Not many days, bunch of days. But the overall directional charts that I was showing was the upper gap. They would fill the upper gap. And it filled the upper gap. Now, I'm going to lie to you like the rest of the trading services out there and said, oh, yeah, I held my old original position and the stock was up $40 today. No, I didn't. I had a sliver of it left because most of it was gone within the past 48 hours and it was still a good trade. Amazing trade. In fact, I'm an idiot. I didn't even know they had earnings today till I got an alert on my iPhone this morning and I saw the stock up 40. So on that note, what do? There's nothing you can do. Did I push people to say, fish eyes, you in?
Sorry, I'm late. I'm here.
Don't worry about it, brother. We can always find you, okay? No worries about that. You find me, I find you. Fish eyes is a fish mafia guy, so just watch out, okay? He'll put you under the water. Okay, just kidding. So bottom line is that no, I didn't. I wasn't there on this 40-point move. I had a sliver of it left. Doesn't matter. So the point is that going back to what I'm showing you. So this is where the margin clerks came in. Now, why shouldn't they come in? If you're a margin clerk and you owe $60,000 in margin calls that you need to recover from that hedge fund, I'm going to use the abbreviation HF, you're going to say, dude, that's it. They take advantage of fast-moving, rising prices. So they took the money. And they covered and they balanced their books. Anyone who's in any business, you got to balance your books, right? Your debits and your credits. So the margin clerks are like, great, you gave me 24 points on Amazon, you gave me 5, 6 a reversal in NVIDIA, great, let me sell it. They sold their positions in order to recover their money. Standard procedure. And one of the main causes of intraday volatility. Just simple. There's nothing to really scratch your head and say, what did he say? Standard procedure. because they have control over those portfolios that are held at their investment banks. When a hedge fund, when you buy a stock, who has possession of that stock? Come on, guys. Does you have possession of your stock or your options? Like in your, nice oak cabinet or, whatever. Who has it?
The broker does. The
That's
broker.
that's right. The broker. So if you owe them money, they will take it. That's called intraday volatility. And then everyone scratches their head. I'm not talking about our group and stuff because you guys are far more educated than everyone else out there, believe me. Okay? So, and then the media scratches their head and says, oh, yeah, they try to find a reason. There is no reason. Nothing changed between 9:30 to 11:30 to 2:30. So what we do here at Clueless Trading is we try to look and make sense of it through a visual chart. So people who are not tracking the charts or understanding it just shouldn't trade these things. Or if you trade them, then take your 20, 30, 40% and get the heck out of Dodge. The charts are there to put a sense of rationality to the craziness that's known as volatility. There is nothing crazy about the markets. I see patterns here. Many of you do too. I know Fish Eyes and Dano and so I'm in the market. They see patterns on this chart better than most people out there. Now, are the patterns are going to be volatile? Sure. Is there going to be another margin sell right where they hit it tomorrow? Maybe. Are they done with their margin sells? We don't know yet. Could be done by late tomorrow. Could be Thursday. Now, the way you just do it, here's the trick. What day was the big crash on the tech side when they said that's it, techs are finished and all that garbage? What day was it? Come on, guys, it's right here. But I need you guys to focus and tell me.
The 29th.
Thank you. So let's do a calendar check. All right. What I try to do in these webinars is I try to, and again, everyone has their own risk personality. Everyone has their own way of looking at things, and a very smart way of looking at things. I'm sure many of you. All I try to do is try to get you through into my clueless head as to how I look at things, because you guys are paying those monthly rates to be my members, and I'm truly grateful for it. So all I'm trying to do is trying to show you the things I've seen, and I've been in other services for many years. I never saw them explain it like this. Are they stupid? No. They have their own methods, whatever. I'm truly a robot. But that doesn't mean that, if a robot can go through gyrations. But at least I explain things the way the reality is in the markets now. These markets you heard on CNBC, on Bloomberg, or other financial channels, okay? All of a sudden they say, "Oh, this was the algorithmic sell," blah 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 blah. Dude, we know that stuff. That's how we draw our charts. So what I try to do is to get you guys into my head a little bit, and so you understand the way I'm looking at things. And I'm sure it's going to help you. And the randomness will be somewhat explained in your head. So this happened on 11/29. So I'm pulling up the calendar on the other side. So let's do a day count. 29th was a Wednesday, last Wednesday. Normally they give you 3 to 5 days to satisfy your margin calls, or chop, chop, chop. You're done. It's called T+3 with a grace period T+5. T means from the trading day that it happened. They give you 3 days. That's standard SEC FINRA rules. Okay? So let's do a day count. Wednesday was the 29th. Thursday was T+1, the 30th. Friday was T plus 2. Okay? The first. Monday was T plus 3. Everyone following what I'm saying? This is, let me write that down. Hold on. Let me write that down. This is the day the world ended. That's what you guys all, that's what they made it sound like. Okay, so this is the trade day. So it's T plus 3 plus 2 days grace period. If you're a good client and stuff, they'll say, oh, I used to beg my margin clerk and got her or him nice wine for Christmas and stuff. So they gave my clients a little bit more time. So let's look at T plus 3. So T plus 3 is, 1 second, 1, 2, the 29. So T plus 1, 2, 3. Okay, so I'm going to make this simple. So the third date was Monday. Okay, was Monday. Now this is just one aspect of the market, but I'm giving you the mechanical aspect of the market because news and other things also have a major influence on the markets. We know that, and that's what everybody follows. Oh, they said, Trump said that he's going to basically cut corporate taxes down to 0, all that stuff. Yeah, market will rally. Yeah, we know all that stuff, okay? I'm giving you the mechanical aspects of the market, the actual money aspect, which is inflows or outflows. So the third day was Monday. And what day was Monday? Somebody pull a calendar up so they can see. It was the 4th of December. What day is T plus 5? Somebody please tell me. And T was 11/29. They make it real simple here.
Wednesday.
Thank you. Wednesday is T plus 5. All right? So Wednesday should end the selling because after the 5th day, it's chop chop. Futures are up 2.25 right now. They did some heavy duty selling today. And they took advantage of these rising prices, just the way they took advantage of these rising prices to hit the nail on the head and take their margin sellouts and go out. This was a huge hammer reversal. We lose this, we're going down. Every time the market raised its head and got those to the levels that that I kept on showing, boom, they hit it. This is that big border, the green line, that if the market crosses, then the NASDAQ will basically hit another new high and go and complete this pattern. This is a major resistance, this green line. That's why they hit it there. Because from here, all the way to here, and from here, all the way to here, the portfolios went up, right? You guys get it now, right? The portfolios kept on going higher. So boom, the margin clerk says, fine, you didn't come up with my 60 grand, 100 million bucks. I mean, it's not 100 million, that's too much. $10 million, whatever. Boom, I'm selling you. That's why we have technical, tactical resistances and supports. It means nothing on those individual stocks unless that particular sector or that individual stock is undergoing some severe bad news. Did anyone hear any bad news on Nvidia? Just take an example. No. This morning the stock went from being down 2 to up 4, reversal of $5 or $6. IBM partnership under a normal market where there are no margin sellouts, the stock would be up $9. IBM is now begging Nvidia, a company that they scorned for so many years. They looked down Nvidia. Bunch of little crackpots making video game chips. The guys are the leaders in artificial intelligence. Now, IBM, the granddaddy of all companies, it's like your rich grandfather, right? Big Blue is now at their doorstep saying, hey, we want to partner with you on artificial intelligence. Stay on the thing, on the session for a minute, and I will be back. Bear with me 1 second. So just look at this for a minute, and you tell me why you shouldn't be a tactical trader. Somebody come up with a good reason. I will be honored, and I will gift them. Stay on the line. I'm back. You guys miss me? Is everyone still here?
Yeah, looks like it.
So Mike, our great member here, said money is the root of all evil. Okay, I beg to disagree. Money is the source of many anxieties going away. Okay, so you sound like Karl Marx, the father of socialism. Money is the root of all evil. Okay, great. Okay, I suggest one thing, Mike, and with all due respect, because I like you a lot. Why don't you pay all my bills and my debts? So in that case, I will say money is the root of all evil because I have a sugar daddy who's going to take care of all the things that happen in life, which is paying bills and debts and mortgages. All right, let's move on. Thank you for that thing. That was good. All right. So, bottom line is that at this point, you understand the dynamics of why some of these things happen. All right. So, we're done with that because I don't want to keep on harping on the same thing. Now, saying all that, we are seeing patterns. And given that T plus 5 ends tomorrow, we could have an early morning sell off. Or if we ramp up in the morning, Can somebody fill in the blanks? What's going to happen within the first hour? If we ramp up in the morning, what's going to happen within the first hour?
Margin calls.
Thank you. And how do you determine where the margin calls are going to get hit? You're so close, Trent, because you know it. And anyone can answer that question. Where the margin call is going to hit?
On your chart,
That's right.
you're
You got to follow. You got to follow the charts. It's going to hit at the upper Bollinger. This is the 1 hour chart, or it's going to hit right here at the previous level of 63.40, where the techs are going to basically, you see a reversal candle or some sort of red candle developing. You know that's what they're hitting. It doesn't have to be, that old-fashioned way of looking at, oh, we took out yesterday's highs and stuff. It means nothing these days. They use all those different terms. I never really followed it. Range breakout, blah blah blah. Not range breakout. Whatever these day traders use. Sorry. I know where they're going to hit. Either they're going to hit here or they're going to hit here. And if it goes blast past that, they're going to hit here. That's why we have a red arrow at this nice downtrend line from the day that the big flash crash tech happened. That's why I have this line drawn. Guys, it's not that hard. And if it goes up here, the next level of major resistance is going to be right here. That's why I have this big fat green line drawn. Resistance. Resistance is green. Support is red. And that will complete the pattern. So you don't want to be like getting all excited around here. You want to be dumping things. You want to be buying down here. Because as far as I can see it, this is a complex head and shoulder with a head down here, left shoulder, right shoulder, and a neckline, which is right here. Now remember, these numbers, 63, 29 and stuff, we're not trading these numbers, right? Because we don't trade the NQs. I don't trade the NQ futures or anything like that. We do it through the QQQ. So, not that hard. There's your neckline. If it breaks above the neckline, it's going to hit the downtrend line right here, close to this supply zone, the second candle breakdown, and then finally here. Will this whole pattern be completed? I don't know. Might. Apple will come out and said they sold 3 more phones. NVIDIA will, Google will say, they found a search algo. I'm just half kidding, but, that reads your brains. But I see a pattern. And the patterns are completely correlated with what's happening, the reality of the market, where the sellers are going to come in and where the buyers are going to come in. So are we done with this chart? Any quick questions? I'll be happy to answer them. Now, are these like very simple, like beautiful patterns, like, in my basic videos that are on my YouTube channel? No, these are complex patterns but they still have a form. Got to train your eyes to look at charts like, and try to see a little bit what I see. It's going to help you, no question about it. Is it going to make your life all happy? Yeah, a little bit happier. You still have to deal with the struggles of intraday trading. So all those little platitudes and the cliches and stuff that some members put out, nothing wrong with that, including my good friend JB, who's watching the Marquette game. All right. And is it doesn't matter. So if you constantly look at prices, it's not going to do anything for you. Because you have to know where the prices are going to hit those levels where you need to sell and where you need to buy. This ain't grandpa's market. Algorithmic codes are written by a bunch of very smart geeks from the United States of America, from Russia, from China, from India. God, I sound like Trump the way I'm saying China, India. Okay? Bangladesh. These guys are writing these codes, and they don't care. They don't know anything about the fundamentals of the market. They're writing the codes based on momentum, patterns, and all kinds of stuff. End of story. Let's go back to the S&P 500. Any questions on this one before I leave it? Because this is the NASDAQ. This is what the NASDAQ is doing where the techs are embedded. And it is clear as day where all those levels are. And this is a short-term chart known as the 1-hour chart that you can trade off. And you know where you need to get out. You don't need to always be there because we don't know where this sell program will start and the inverted hammer will begin. But once we're approaching these levels, you need to get out. Or take down, or leave it a little bit in there. I don't care whether it's 1 contract or 5 contracts. You need to basically sell a lot of them and then see what the reaction is. Any questions? Actually, I'll cover that in a second. Yeah, go ahead.
Sorry, one question. You said it was a reverse head and shoulders, possibly.
Yeah.
What about being a cup and handle? Is that not?
Yeah,
look like a rough-
it's a large cup and handle. I'm talking short term. Here's your head as a head and shoulder. Here's your left shoulder. Your right shoulder is exactly where my arrow is. So if you go from here to here and then fail, don't you think you're gonna make some crap loads of money from here to here?
Yeah.
Yeah, exactly. Which brings me to a good point that Trent brought out. Remember, we're not mutual fund managers. We don't have billions at our disposal. We have thousands at our disposal or hundreds at our disposal, right? So you got to try to maximize that money that you have in your pocket. And if you think that the market's going to completely fall apart because this is a head, this is a head, this is a left shoulder, and that's a right shoulder, and you're going to wait around for everything to happen the way it is, well, dude, how many times have hedge funds worth hundreds of millions been burnt because the S&P 500 is hitting new highs based on multiple reversals? No wonder half of them are out of business. And that's why we get 300-point up days. Always think as an individual, not like you're a fund. So if you're waiting around for that head and shoulder to develop, it might not develop because we might just shoot up here and hit the 64.40 level and finish the pattern. And is this the first time I'm saying it? It's happened so many times. Now, Exita asked a quick question, is the Santa rally still possible? Santa rallies on individual sharp stocks. Like Santa doesn't take the whole market up anymore. Each sector does its own thing. Individual stocks do their own thing. Have we had Santa rallies on multiple swing trades? Oh boy, we have a Santa on crack rallies. Well, I shouldn't say that. That's blasphemous. Well, Santa on lots of Sprite rally. Okay, Santa on Red Bull rallies. All right, absolutely. You cannot look at the market as a monolithic thing that everything is going to go up together. It ain't going to happen. It's going to happen. Biotechs, techs, financials, transports, everything going up together. Not going to happen. You got to be selective, and you will get many Santa rallies. But the overall market lifting, where everything's going higher at the same time, nope, not going to happen. That is the nature of the markets right now. Embrace it. Hate it, embrace it. Do it. Not going to happen. Did everyone understand what I just said? Did everyone understand what I just said? Because this is what I'm explaining tonight is the essence of making money and your survival in tactical markets. The media makes everything look really simple. Why do you think they do that? Because they have no frigging clue. Are there some smart guys who come on CNBC and stuff? CNBC is always on the top. Bloomberg is on my screen, on one of my computer screens. Yes, there's a bunch of smart guys. But the media makes it watered down. Blah, blah, blah. Yes, it's going on high. Oh, market's down, Texas. Garbage. What we're doing is hardcore analysis. This is what's done on the 60th, 70th floor of Goldman Sachs, okay? This is what's done at JP Morgan. This is what's done at the hedge funds. Citadel, 0.72. Fortis Capital. I'm dead serious. So yes, the Santa rally's always happening depending on which way you look at it. Did we not have a Santa rally on the Russell 2000? Did we not have a Santa rally on the S&P 500, which almost hit 2,700? Did I not forecast that weeks ago, months ago? So if you don't get into Santa's sleigh at the right time, you're not going to get there. And that applies to everybody. What is a rally if you don't buy cheap? Think about that for a minute. What is a rally if you don't buy cheap? Did you ever think of that for a minute? So let's take a look at the S&P 500. This is a daily chart, and it's a very important chart. It's a very important chart. Okay? So we had a spinning top here back in August. That spinning top, that's it. That's a spinning top. Okay, that's why I wrote down spinning top. A somewhat of a long tail with the body of the thing with the red candle. Now, somebody doesn't understand candle dynamics? Go to my YouTube channel. There's a whole video. I didn't do it. I pasted it because it was amazing. Go listen to that 20-minute video on candle dynamics. What are candles? Can somebody tell me why candles are important? What does this very large red candle mean?
It's where buyers bought and then
Don't.
market.
If you told your grandma that, I always look at simple things here when I'm teaching my members. If I can get a 10-year-old kid to understand what I'm explaining, then I have done my job the right way. What you're doing is you're trying to make it complicated. What is a candle? I want all of you to mentally calibrate. That's why I'm doing this at 8 in the evening tonight. Okay? What is a candle? What does this red candle mean in simple English?
Psychology or emotions of the market.
Garbage answer. What does this red candle mean? When it comes to the market, what does this big, fat, ugly, bearish...
Selling.
And
Selling.
what does sell? I don't want technical answers. I want you to explain to your neighborhood 7-Eleven guy that you like. He's a nice guy, okay? What this bloody red, big, fat red candle means.
Lots of selling.
Yeah, what does lots of selling mean?
Selling their stocks. People getting out of their positions.
Guys, simple English. Billions of dollars just came out of the market. Right. So you're saying all the right answers, but that's the right answer. A big, fat, ugly, bearish, engulfing, god ugly candle means there was a lot of sellers and billions of dollars came out of the market on that day. Yes or no?
Yes.
Good. So as a trader, when that happened, what happened to the internals, which is your internal health of the market, based on the basic thing, which is the 1413 stochastics known as the fast stochastics. What happened to the stochastics?
They bottomed.
That's not
They
the answer.
bottomed?
Yeah. No, they didn't just bottom. They got deep oversold. And when something gets deep oversold, what happens?
The market goes back
Buyers
up. Buy an
step in.
opportunity. Yeah.
What you guys, come on. The market does what? Guys, this is
The buyers step in.
Yeah, the buyers step in. Because deep oversold means that at that point, things are cheap. Try to recalibrate your brain like you're looking at these charts so you can explain to your grandma, which is yourself, who doesn't know anything about the markets, because that's the way I look at things. and try to make it simple. So prices are cheap. What do traders do at these levels? Freeze. They don't look at this. Doesn't matter like how many charts I'm putting out, slow stochastics bottoming, which I did at least 3 times today. Yes or no, Trent?
Yes, sir.
Exactly.
Yes, sir.
Don't call me sir. Believe me. I ain't got a knighthood and I ain't that rich for you to call me sir. Okay? So just say yes. So bottom line is that everyone's frozen to death. Like, oh, okay, that's fine. I don't blame anybody. Like, do whatever you need to do. You want to go for the adult diapers? It's fine with me. So this simply means that billions of dollars came out of the market. Now, did it really make a difference to the overall trajectory of the markets? Looking at this chart, did it make a difference to the overall trajectory on the market? Because we are up more than
No.
up more than
No.
1,200 points on the Dow Jones. From 23,000, 22,000, whatever, 800, we are up more than 1,200 points on the Dow. So what difference did this make? What difference did this make? Where it created a massive double bottom. Did it make any difference to the overall trajectory of the market?
No.
I want other people to basically look at it and and say something. Dano, did it make any big difference to the markets? Where the markets wanted to go?
Absolutely not.
Agzita, did it make a big difference to the markets?
No.
Was
Not a big-
everybody, excuse my French, shitting in their pants, dead scared, not looking at charts, dead silent? Tell me the truth. I know the truth because I run the
I did.
service. Thank you.
I did a little.
I run the service, and I know most people were. Now, did I know it was going to turn? No. Did I see these things forming where it was a high probability that the markets would at least have a bounce? Yes, it did. Dude, like we say in New York, dude, it's the same crap. It's the same old story over and over again. The next chart we're going to look at is going to look at the overall directional bet on the market. Is this market like about to say goodbye, see you later? Or is this market just having a quick corrective pullback, and in between you have to do those trades that you need to do? So the market basically did this. Hey, it's all drawn out for you. Remember a bunch of days ago, I said this would be either an inverted hammer, and it turned out to be a doji. That day wasn't long ago. It was the 29th of November. What was the 29th of November that we just discussed in the previous charts? On the day, what happened? Come on, guys, you gotta have some
Friday
memory.
when it melted down.
What melted down? The Nasdaq melted
Friday.
down.
Friday had a 400 point drop or 350 point drop. Sorry.
The 29th was a Wednesday, and on the 29th, the Nasdaq melted down. Okay, the Dow was up, the Russell was up, the Nasdaq melted down. Okay, so this was where the doji happened. I went ahead and shorted via a couple of SPX puts. Was I right or wrong? Come on, guys. This is where I put I put some hedges out. I had the VIX calls, and I bought it. I was dead wrong. Because the next day the market opened down just a little bit and went up 300 points. Did I lose money that day? No, I didn't. Because I got stopped out and we went long hard. Because I'm not that stupid to ever disrespect tactical signals coming out of the market. That is the biggest problem with many of you. You guys completely disrespect. Even if you don't want to admit it, you completely disrespect the power of Mr. Market or Mrs. Market. Okay? I don't know why they call it Mr. Market. I mean, what is that? Like, it's a male thing going on, You guys don't focus on charts. Keep on doing that. keep on staying miserable. Keep on asking yourself, oh, well, that rally's going to come. Yeah, it's going to come, or it's not going to come. We're all going to crash and burn and live in caves. Blah, blah, blah. The more you focus on these charts, which are drawn to perfection prior to the event happening, you can see that happening right there. Right there. This is now. Now. This is a real-time futures. You know where it can go down. There's a big fat red line here. Okay? That's at the 2607 level, 26, whatever level on the E-minis. But I think this channel is going to hold because the channel has held since the 17th of November. I'm sorry, the middle of November, right there. This channel has held. And now we're having a corrective phase, and we'll probably hit the bottom of the channel. And if we do not bounce from here, then we're going to come and retest this red line. But you know where the markets can go. And I'm going to cover the internals in a quick second. So guys, the point I'm making here, I have no beef whether you want to follow the charts or not follow the charts, whatever. You want to stay in the dark, ignorant, and just looking at the prices like, oh yeah, Facebook is going to do this and that, and chasing the prices and getting slammed day after day after day. Hey, that's your prerogative, not mine. I'm looking at the overall picture. If there is something fundamentally cracking in the market, trust me, I'm smart enough. And that I'll say, I'm smart enough than any of you out there, okay, to alert you guys that this is a bad thing. Can I get false signals sometimes? Absolutely. Do I turn around and it's not like we're all short, but that was the hedge there. But this did look like a spinning top, just like this. So I went with my discipline. Mr. or Mrs. Market said, no way, we want to go. So time to wake up, okay? All of you. So right now, here's a channel. You see that little red arrow there? Look, it takes time for me to put these freaking arrows. They don't just appear like automatically. I got to go here, put an arrow and stuff. Respect the charts, guys. So you're not left in the dark all the time. And of course, I'm constantly putting real-time charts and everything and doing whatever. Make your life easier, a little easier. Instead of being constantly in the dark and like grasping for straws and what StockTwits is saying or what your other trading services you follow are saying. And I want you guys to follow like all trading services that's out there. Nobody is going to be as accurate on a tactical basis as Clueless Trading is. That I can assure you. Because I spent a lot of time and energy, a lot of thinking to put these things out. End of story. There's nothing wrong in these charts. Now, somebody will say, hey, looks like this is starting to crawl over. Yes, it is. I have a red line drawn here. That means that the last couple of times where the markets turn, look, keep looking, this is deep oversold. Deep oversold. And even though it was deep oversold, it took 2 days for it to boom. So this is your first level of support. So even if it pulls back a little bit, that means we pull down here a little bit. If it does this, which it has, then we're going to go like this. Is it going to create 2,700 plus? I have no frigging idea. Can it happen? It sure can happen. Everybody's pissing on the tax plan. There's a lot of flaws in the tax plan. So what? Life is flawed. But overall, it's great for American business. Is it really terrible for American taxpayers? Not really. Is it great for them? Not really. Trust me, you're not going to see that much difference in your tax bill. I don't care, if you're wearing a Trump hat and running around. Okay? Then I'm a hardcore Republican. But I know good old Mr. Donald Trump and his cohorts back from the days very well. Okay? This is a political win. It's not a fiscal win. Okay? That's it. Is it going to make American business more easier to deal with? Absolutely. And I'm totally for it. Is it going to make a difference to your paychecks or whatever you get? or writing your own checks like I do, as self-employed? No. Will you get more loopholes? Yeah, you'll find loopholes if you have a good accountant. All right? End of story. So there's nothing wrong with this. Unless we break these lines, and then we can basically fall really hard. Does it happen in one day? No. Can weird things happen in the market? Absolutely. But we know what the levels are. Any questions on this? Any quick questions? I mean,
None for me, thank you.
feel free to ask because I'm here. Okay, I'm spending my time. I want to hear from you guys. Bottom line is it either bounces off this channel or slips down, tests the 2600 level or so, and then creates a big move up. When it breaks this, that's a different story. Remember, you got to respect the charts. You got to respect when Mr. or Mrs. Market is telling you time to go really short. So unless that happens, a minor retracement of this thing, which is called what? What does this look like?
A bull flag.
That's right. It still looks like a bull flag as long as it's over these levels. Thank you. As long as it's over this level. It's a bull flag, not necessarily. It's a consolidation channel. A consolidation channel can project itself down here. So down here means that we are right now at around 2630. So if we fall towards 2600, how many Dow points is that? If we lose 30 S&P or E-mini things, how much is that on the Dow Jones? If we fall here. Come on, 30 S&P points or 30 E-mini.
180 points.
Thank you very much. Thank you so much. Thank you so much. Okay? And everyone should know that like clockwork, like what's 1 + 1 = 2. Because it's a factor of 6. So 30 S&P points is roughly 180 Dow points. Is it time to completely freak out? Of course, you've got to manage your trades right because 180 Dow points can take your trades down if you're not following my 1-hour charts. Like, whoops, you're done. Okay? So it's not like, oh, you got all excited and then put all the money in there and boom, you drop 180 Dow points before it bounces, which has happened a zillion times, even of these unbelievably ugly sell candles. Remember, big sell candle, big reversal. Big sell candle, reversal, and then the market said, okay, see you later. And continued for weeks and weeks from August. So even with these candles, the market didn't break. I'm not saying the market can't break. I'm just giving you the reality of how it happens. All right, let's move on. I'm going to scan through a bunch of charts because I can spend so much time on one chart. Okay. Yeah, go ahead.
Frank,
Go
real
ahead,
quick.
Tom. Yeah.
The 533 is still sort of pointing down on the daily.
Yeah, I'm going to bring that up in the last couple of minutes of the thing. Okay, so I'll explain to you. So this is a 1 hour. This is the 15-minute chart on the S&P. And remember, you guys can replicate this at investing.com. This, anybody trading SPX? I know Trent was buying some. Okay, I didn't even learn. I didn't learn. Yep, you're buying. It's actually pretty damn good. Okay, because what is this exactly? What it's exactly is that it is a very sharp move, heavy volatility. Okay, a left shoulder, our right shoulder, which we need to basically get over. Then it remains a right shoulder, so it becomes a complex head and shoulder. Remember, a head and shoulder looks like this with a neckline and then a breakout. Here's another thing I want to remind everybody, and all the new people are going to listen to it because you're going to tell everybody to listen to my video cast, right? Don't expect a frigging breakout every day. We're all trained to think like that. Oh, it's going to be a huge breakout. Every day is not going to be a 100-point day. That's why we are selective on our stocks and we try to trade on a tactical basis. Every trader likes to think a huge breakout or a huge breakdown. Well, it doesn't work like that. Markets move in ranges, a trading range. That's why pre-market, I actually put the trading range out there. So You know, I keep on telling myself I cannot keep on reminding everybody, all my great members, to look at these charts and focus on this. It's important. And I still keep on doing it. I really spoil you guys. Like, you should be automatically looking at it and then making your own decisions, what you see or what you want to do. So, final reminder, look at the charts, look at what you're doing, and then do what you need to do. Is it going to be perfect? Nope. But are you going to survive some calamities? Yes, big time. Are you going to capture some nice profits and get the heck out of Dodge because you're following the charts? Yes, you will. Remember, as adults, we become stubborn. As children, we're stubborn, but we change. So try to do that on your own head, guys, okay? Seriously. So this chart, it's very convoluted. You know, this is what we have to deal with on a daily basis. But the lines are drawn. The lines are drawn. You got the big fat support, you got this and that. The more you look at this, the more you understand. That's all I got to say. Okay, so this is your trading chart. You're trading S&P. You know the S&P's on the best case scenario hit 2643. That means 13 points from here. That means 65 to 70, 65 to 70 plus points on the Dow. Woo! Time to get really excited? No, time to freaking sell. Because if it goes like this, you bet there are going to be sell programs here on that downtrend line. So if you keep on looking at prices, you're dead. If you use my charts and then look at prices, you're going to be very alive and quite happy for the day. And you won't be asking yourself, what happened here? Like, nothing happened. It hit the downtrend line. That's all. Let's move on. Here's a more, this is the same chart, but a lot more different lines put in there. And every line is money in your pocket. Okay? We have a pinch Bollinger. And if you want to really get into the finer details of it, many of you are very devoted ACS advanced coaching members. The rest of you, I'm giving you the flavor of it and stuff because I don't have time to sit here for 3 hours explaining all this stuff. All right? There's a lot of stuff going on. So you want to learn a little bit more? Sign up for the ACS sessions. And the ones who have done, trust me, they've done a heck of a lot better than the ones who haven't. Now, is that my marketing pitch that if you don't do the ACS, you'll suffer? No. But if you don't quite understand the dynamics of tactical trading, which is what the markets are, 90% of trading in the markets are completely robotic and done by machines. Because grandpa and grandma are no longer trading stocks. They're buying Bitcoin. All right? So that's it. So if you want to make some real decent money in the market and not keep on losing, then I suggest you sign up for the ACS coaching. And then move on. And if you truly understand all the charts and stuff, God bless you. That'd be fantastic. That's fantastic. But I doubt if most of you guys do. So on that note, there's a channel. Is it a chart that is shown on CNBC? Never. Because they don't even know how the heck to look at it. So here's your big gap fill. I even wrote down gap fill. Well, there's your gap fill. So a bull's dream would be that we get up here and we get up here where the big sell programs come in, because that's where the crash started, the flash crash. Okay? And this was on the 4th. This was yesterday. So one can look at it two ways because everything is called cognitive bias. Can somebody tell me what cognitive bias means? Tom, don't even bother because I know you know. What's cognitive bias? What does it mean in trading and in life? Come on, guys. We don't have all night. What's cognitive bias? C-O-G. Somebody's Googling right now, like, what's cognitive bias? You know, do it. Yeah, I love it. You know, just do it. You know, what's cognitive bias? Because this applies to our own lives and it applies to trading, and we'll make you more money. What?
your train of thinking, your way of thinking,
Yeah, exactly.
the thought process.
Yeah, exactly. So Trent said it in a very simple way that even a 3-year-old could understand. This is the way I look. This is the way I say it. Everyone has their own biases, right? About the way they look at life, how they look at a chart, or they look at a stock, whatever. So it's the way you're thinking, whether you're bullish or bearish, is what nobody's ever neutral in life. Somebody says, "Oh, I'm an independent voter. I'm very neutral about all social issues." Garbage. Everybody is racist. Oops, I shouldn't say that. Okay. Everybody has flaws. Everybody's looking at at life and politics and in a very jaundiced way. Okay. Everybody is guilty. Nobody is neutral in life. We all have our biases. People who try to sort of be better human beings, they control their biases and try to look at the facts. In this climate, nobody looks at the facts. Just like the market. You look at a chart, a bear will tell you how we're going to crash and burn right down here and fall below. A bull will tell you, hey, this looks like that's called cognitive bias, the way you approach things in life. Now, I'm not a constant bull, but I'm just happy I'm alive. All right? And I don't do drugs and I don't shoot up things, all right? But I'm just grateful to God every day that God has given me the chance to do what I do. So, saying all that, a bull will say, hey, this looks like a pretty complex W pattern. Really? That's called cognitive bias. A bear will say, nope, this thing's going down. We're going all the way down to 2600. Both are correct in this respect. We could move up a little bit, hit the downtrend line, and then fall towards that 2600 level where the big buy programs come in. So it's a cognitive bias of it. What I want to impress upon you guys, and I'm going to end this very soon, is don't rely on a one-way street. Markets are not linear. They're algorithmic. You know what that means in simple English? If I was telling the bum on the street, it simply means nothing goes up in a straight line and nothing comes down in a straight line. In between, there's a lot of zigzags. And that guy, it is a guy in Jersey City. I always give him like a couple of bucks every time I see him. Great guy. I think he spends it mostly on shooting himself up. I don't know. So the bottom thing is that this is what happens. That's it. So if you think it's a one-way street, that things are just going to go one way, bigger picture, it's going one way overall, in between corrective pullbacks. But short term, from a trader perspective, these are the charts you got to rely on. All the lines are drawn, and you got to figure out how to do what you need to do. I try to update as quickly as possible. It's not that possible when somebody's not looking at the charts, and it's not possible for me to do it every 5 minutes. That's the reason why you have your own screens. So let's take a look at this. We already took a look at that. Let's take a look at this. Here's your beautiful Russell 2000 that 99.99% of you did not partake. Okay? On this major run. On this major run. And you didn't even get mad at yourself. That is the sad part. When traders don't get mad at themselves for not doing something, long or short, or taking a trade, and then they make excuses to themselves, that is the ultimate trading sin. I'm dead serious. I get mad at myself a lot. Okay? And if you guys think that because you missed a phenomenal trade, oh, it's nothing, it's just okay. No, it's not okay. Because you could have changed some fundamental aspects of your life if you did some of these swing trades. And if you don't think like that, I can't help you. You gotta get angry at yourself. Anger can change you as a trader, all right? I don't want to get into it too much. So what's going on here? We went up big. We hit this level that nobody. Show me one chart out there from all your other services, other people you follow, whatever, who drew this chart all the way down from the breakout level, if not from here. Please provide me. I will be a lifelong subscriber to them. Nobody midair said it's going to go to 1560. I did. And that's exactly where it went. So if you don't respect charts, for God's sakes, print this one out, put it there, and say, you know what? These charts are pretty damn good. And they're really damn good. Because I drew a rising wedge, not a genius, I drew a rising wedge, and I put that line right here. And guess what it went? Because there is no reference point before that it was going to go to 1560. It went there. Some of you did the trade overall and did well. And now it's time to freak out, right? No, because once it comes down and retests this megaphone pattern that I kept on talking about for days and days, which is around 1511, very close to where we are right now. That's one buy zone, and the next buy zone is this gap fill. That's a gap fill. That's the reason why I have a gap fill marker, and that's 1500. High probability it's going to do that, or not. Let's say go to 1560, but it can easily bounce from 1500 to 1540. I have nothing more to say. Keep on ignoring the charts. You're not going to get anywhere. You can, you can put like songs on chat room and hit a couple of good ones here and there and think you're a genius. So last thing I'm going to cover is the VIX. The VIX is a very complex chart. Why? Because the VIX is not a stock. It's a derivative, right? I'm still seeing a pattern, and what pattern that I drew from all these points did get hit. These are massive reversals. Can the VIX just move up like this all the way up here and retest it again? Yes. Will it get sold off here again? Yes. Did the VIX fill the gap here and then reverse from all the way up here and then here? Absolutely. So on a move up, and we always have VIX hedges. They're cheap. 60 cents, 70 cents, 80 cents, $1. Have a couple of them. That's your insurance. My car got hit 2 weeks ago while I was parked. Like a big hit. I'm like, what? Thank God for insurance. Okay? So, will the VIX do this and fill this gap again? Sure it can. Follow the VIX chart. Any quick questions on the VIX chart? Come on, guys. No questions on the VIX chart? And most of you are terrified most of the time? Wow. That's a good one. That's almost like an oxymoron. I'm really scared of the market, but I don't have any questions on the VIX chart. Yes? No? Nobody? Am I still connected?
Yeah, we hear you.
Yeah.
Okay,
Yeah,
fine.
yeah.
Okay, that's good. That's good. I guess I might be I'm so entertaining that nobody has any questions. I like that. So the VIX, I don't really. Let's put it this way. I look at the broader pattern, guys. I don't really microanalyze it because it's so choppy, and the reason it's choppy is, which, as my good friend Swimming the Market knows, it's a derivative. Okay. So if anyone's taken calculus, it's not like simple math. It's a derivative of the of the overall thing. So these things I can kind of predict by drawing these lines and stuff, but again, it's hard. So what I do is I put the ranges out there, and one can say, hey, that's a massive head and shoulder, which it is. It's a head, left shoulder, right shoulder. That means the VIX can jump up towards the upper Bollinger towards 12. That means the calls which we bought around 50, 60 cents or so, the December 13th, 11 calls will go from where it closed at today, which is around $1, to $1.50. So want to make a few 50% of your money, do it. You gotta have it. The VIX does not. The VIX moves very fast, and it is like you can see how choppy it is. But overall, the VIX is telling me that it's a massive head and shoulder. Left shoulder, right shoulder. If it breaks over the right shoulder, then it becomes just like a stock. It becomes a W pattern. Will the W pattern resolve itself all the way at 1450, which means you're going to make a lot of money? It can. It can. So you can predict the VIX. You just have to look at it, have some in there, and then move from there. Now, last thing I want to show you guys. I don't have time for like individual stocks and stuff right now. So SPX. So this is a there's your daily chart, okay? On the S&P 500, we are breaking down. This is the bigger picture, okay? Not the short-term picture. We're breaking down, nothing crazy, but we have a stochastic crossover down. So remember what I always said. There are levels where the buyers will come in hard. Levels where the bull market is still intact. These are the levels. Here's the 20-day moving average, SPX, so you don't have to do the calculation like 5 points more, whatever. Bottom line is, this is the second day we had this. This is your acceleration channel. So the first level of contact is 2620. Where things get broken is when we break below these uptrending beautiful lines known as the 20-day moving average, the 34-day moving average, the 50-day moving average. Does anyone see any type of damage on the 20, on the 50, on the 34 and the 50? Does anyone see that? I'm going to try to zoom in so you guys. So these are the lines. Remember, we shot up a lot more. That's called standard deviation. We moved away from the highways that the market travels in. We moved away from the highways the market travels in. I even have lines where the markets will come down to, or it can come down to. So these are the highways, and we move sharply away from that. So now it's simply reverting back to the mean. It's called a mean reversion. Want to learn all about it? Sign up for the ACS coaching sessions, okay? I'm not going to spend 3 hours here explaining all that stuff. So here's your 20. Here's your 34. Here's your 50. Forget about the numbers, but when you look at those lines, do you see any type of technical damage and they're curving or that they're breaking or curving down? Yes or no? Quick, guys.
No.
None whatsoever.
That tells you the bull market is intact and you have to place your bets at the right places. It's really as simple as that. Because when this happens and they bust all the way through these 34 and the 50 and stuff, of course it doesn't happen in one day. Hey, anything can happen on a day. If North Korea lobs a missile that hits northern Japan or hits near Tokyo, we'll fall 500 points? Sure. Okay. If Trump fires Melania and his son, and we'll fall 600 points. All right, I'm just kidding. So the bottom line is anything can happen out there in the real world. But I'm just giving you the thing, the actual, realities of it. So everything is still uptrending. Fluctuations during the day, absolutely. Fluctuations during the over a couple of days, no problem. The bears will look at this and say, "That's it. It's the end of the bull market." Well, it's your job to look at this chart, look at all the lines drawn. These are the acceleration. This was the acceleration phase. And guess what the market did? Almost hit the top of my dotted line. This dotted line wasn't put there by Think or Swim. It was put there by me weeks ago. So now we can come to the bottom of the dotted line, which is roughly 9 points, which means roughly another 60 points or so on the Dow, when everyone's going to freak out again. The 20-day moving average is 2601. My thought process is that definitively gets retested by mid-December, because 30 points from here to 2601, which means roughly 180 points on the Dow. I think it gets done. Okay. If we constantly keep on breaking below the 20 and the 34 and the 50, then things are getting rotten. Okay. But that's a longer, that's more of a multi-week type of chart, even though it's a daily. What I do is I look to see the 4 hour. The 4 hour is curving down, and it has support at the 20-day, the 20 SMA, 2622. So I'm watching this very carefully. For short-term traders who are looking to eat what you kill kind of thing, right? Which I think is a good strategy to do, unless you sit on a couple of swings, is look at what's happening on the internals. Deep, deep, deep oversold. Every time it's gotten there, the market's had some sort of sizable bounce. New highs, forget about it. You're talking about bounces. And on my algo charts that I put out there, trust me, it takes me a long time to construct those, okay? Please, take a good look at them. Take a good look at them, and I'm going to just remind people what they are. Actually, I didn't even put some end of the day charts today, which is fine. One second. There. This chart is a beauty. Okay? It is. And why is it a beauty? Because there you go. Because it's telling me everything I need to know. We are deep oversold. Why is this here? Deep, we're diving into oversold territory. I even put markers in there. And this is why ACS students are 10 steps ahead of the rest of the people who just don't want to learn. Here's your big gap fill. Here is the major critical support. That's again at 26.21. This is one of the best platforms anyone can trade off if they are trying to be active traders and make a decent sum of money or even small sums of money on a daily or a weekly basis. Any quick questions? Because I got to go. Please feel free to ask any questions. No? Okay, I must have been really good tonight. This is your, one second. This is your SPY chart on the same thing. Remember, it's a big gap fill. And these are only, you're talking 30, 40 points. You're not talking end of the world. We're diving towards oversold. In fact, this was posted 8 hours ago. That means it was posted around 10 o'clock. 10 to, like around 12 noon. So this was early. It's already deep oversold right now. So by the time you guys all get terrified because, oh my God, market's down, this and that, you're not looking at my charts. Well, the market's already telling you, hey, it's time for you guys to come and buy me. All right? That's what happens. Oops. What did I do? All right. Any other questions? Because now the silence is getting really exciting.
Hey, Frank, do you have the stock chart NYMO 533 chart available to look at real quick?
Yes. Is that Tom?
No, that's Dano.
Oh, Daniel, yeah, because Tom asked me that. Thanks for reminding me. Because I'm thinking to myself, my good buddy Tom, like he changed his voice. Okay. Yes, I do. Thank you for reminding me. And let me walk you guys through it right now. Remember, that's a swing chart, right? So it's going to give you a swing view. All right, guys. Quick, guys. And this is primarily for ACS students because I've explained this quite a bit. So I'm not going to get into long-winded explanation on this. We have entered the oversold zone. Okay, in bull markets, the minute you enter the oversold zone, you go down a little bit lower, not below 10, and then you bounce. The bounce generally takes you up to the 50 mark, and then the market basically sees what it wants to do and moves on. Here is the positive on this. We went from, and I call the market down here, okay? And we went from being completely negative histogram to very positive histogram, right? So now we are starting to decelerate. This is known as a bell curve, right? It's a bell curve. Anyone take statistics in their lives? So you guys know, all right? So in this particular case, what's happening right now that we're getting oversold real quick, real quick. That's why we have these two red candles. Given the volatility we normally incur in the month of December, the fact that we moved down a couple of hundred points from the, excuse me, that's S&P 500, but on the Dow Jones and on the SPX we dropped very quickly. We lost about 180 points or so, okay, from 2660, actually more than that, more like 200 points on the Dow. Look at what's happening with the histograms. Are they and this is a quick question to people who understand this chart. Are the histograms decelerating rather rapidly, or are they decelerating kind of like, okay, we're down a little bit? Quick, one line answer. Dano.
Yes, it looks like they're decelerating quickly.
Okay. In my opinion, they're not decelerating fast enough, because given the fact that you had these blood red candles, the histogram should be far lower. So what is that signifying? And I appreciate you giving your answer. What it's signifying is there's a lot of strength left in the market. Okay. Now let's take a look at it is a topping process. There's no question about it. Not the end of the world. It's a topping process. That's why I said 2 days ago, if anyone bothered reading my Twitter feed, that I did not, that I felt that the markets were looking toppy. Okay. This is your weekly chart. Weekly chart is still showing large strength. You have this big red sell candle because of the week. Okay. All we did was we fell below 70. There is no indication, and this is just my professional experience, okay, on following the 2 months. Hold on. Let me go back 4 months. We had 2 weeks of, this is the weekly chart. We had 2 weeks down weeks, so we could very possibly come down here. This is the weekly chart, and when I'm looking at the histograms, I repeat again, I do not see any major weakness. Red candle.
So if we
find support, let me finish. Find support at around the 2600, 2620 level, and then it can bounce again. We are still trading over the stochastics, and more importantly, the histograms are not showing me any signs of real weakness. Nobody's fleeing the markets. They're just doing some adjusting. They're doing some tax loss selling, tax gain selling, whatever you call it, which part of it, is going on all over the place. And on here, on the daily, we are getting oversold real fast, and it shows that we probably have a little bit more weakness to go until we reach these lower levels, and then you get this, one second. So yes, go ahead with your question, please, Tom.
So I was looking at the daily down there on the histograms. There's a pattern symmetry from September, October of going down almost to zero and then coming back again towards the end of December.
Yes. Okay. So like I said, we're in a topping. We're in a topping process. We are going to hit 2600. So you have two bets to do. You can basically go out there and buy some 2600 puts out there to maybe, I don't know, because I say I'm scared to recommend it, because I think the market's going to snap back, at least hit the highs again, and then fail. So to go out there and to tell people to buy 20 puts at 2600, which they can certainly have as a hedge, I rather like the VIX, because the VIX is damn cheap. It's 40 cents, 50 cents, $1, depending on the strikes that you buy, and I don't have to spend $3, $4, $5 on the puts.
Okay, that makes sense. Thank
you know what I'm saying? So you can buy 50 of the thing, 40 of the VIX at like let's say at 60 cents instead of buying, because the SPX contracts are pretty expensive here. I checked it out, both on the call side and the put side. Here is something I'm just going to tell you guys very simply, is the fact that, let me just pull up the NYMO. This is a bull market. And bull markets have burnt put buyers, including myself at times. Okay? And I'm scared to really short hard unless I see real breakage. Do I hedge? Absolutely. Absolutely. But to go out there and to basically put a bias towards an S&P put, you wake up in the morning with lots of diapers. And that is the essence of a bull market. Okay? We are in a bull market and nobody wants to believe it. Most people out there, super, super scared. Forget traders. They're so scared stiff every time the market goes down 60 points, they're running for the hills. Okay? And even hardcore analysts are out there coming on the media and saying, oh, things are this and that. So stay selective, have some hedges, but don't bite on the fact that this market's going to all of a sudden roll over and die. It ain't going to do that. Why? Can somebody tell me why it can't roll over and die? And I've explained this many times. And Tom, you stay away from this because you're too smart to. Somebody else step up and tell me why this bull market is not ready to roll over and die. And I've explained this many times. And it's a very simple answer. Come on, guys. We don't have all night.
Wall Street makes its money if the stocks go up.
Oh, Jesus. What a stupid answer. I mean, I'm glad that you answered it. At least I could say it's a stupid answer. Come on, guys. This is why you guys all need to mentally calibrate. Because most people are not involved in the stock market. Trillions of dollars are still sitting on the sidelines. When was the last time you heard anybody being excited about the stock market? Wall Street makes money when things go up. That's bullshit. Excuse my French. Okay? Wall Street makes money when it goes down too. It's a very simple answer, guys, and this is why I love the market, because all of you, most of you, are still so ingrained with the fact, with all due respect, because all of you are my friends, all right? Anybody who's my member is my friend. How about that, okay? So are so ingrained with the fact that the markets are so overvalued. Guys, you're all trading scared. Yes, sometimes you get happy. You get one of my alerts like, oh, it's going on exciting. But in general, who can step up truthfully and say you're trading playing offensive? You're playing offense. Can anybody tell me that? Truthfully. Who's playing offense? Anybody playing real offense? I don't think so. Okay? I'm not. And I play offense pretty hard. So, this is your NIMO, deep oversold, hitting the mid-Bollinger, and at this point, we are looking at, that's your NIMO right there. I don't want to get into it too much, but this is the first time I'm looking at it tonight. And it was down, the NIMO, it was down 129%. It's basically the actual scale. It's an algorithmic scale. Damn good sign. Short-term burst up. So the simple answer, guys, before I leave, majority are scared. Nobody's really bullish on the market. You want to know bullishness in Bitcoin? It's going through the roof. From trailer parks to penthouses, they're all trying to buy some Bitcoin. And Bitcoin's going to go higher. Okay? Because a bubble doesn't just burst till everybody gets in. Stock market, there ain't no real bubble. A real bubble. Because nobody is excited about the stock market. When was the last time you were at a bar and somebody said, hey, dude, did you play Square? Did you buy Roku? Can anyone tell me that happened? Come on, guys, we don't have all night. Yes or no?
No.
Exactly. End of story. There is no bubble in the market. That's the reason why we'll have corrective pullbacks, but the market in no way or form has ended its bull run. Corrective pullbacks? Absolutely. When I see people many members who are aggressively buying major tactical pullbacks and the room is not dead silent, at that point, I'll say there is some euphoria kicking in. And I always try to temper that down by saying, don't just buy the BTFT, buy the tactical dip based on the markets. The bull run is not over. Can we pull back to 300, 400 points? Absolutely. On that note, guys, God bless you all. And I shall see you guys tomorrow. Futures are up about $1.50. Don't dream of crashes. Dream of buying the crashes.
Thank you, Frank.
Thank you.
Thanks.
Take care, guys.